Hey guys, as you know at this channel, I teach you how to live financially free off of dividends using the power of a brokerage account, which in every brokerage account, if you put in $1, you get $4 of purchasing power. So the last few videos have been on how to scale your dividends safely to live financially free using some margin. So I earn over 100,000 per year in dividends at this channel, and I've showed you how I use some margin to do this. Now, today's video is going to show you how I live out of my debt without paying back my margin. Because a lot of you guys are asking, Todd, if you don't ever pay back your margin debt, then how do you live financially free? Okay, I'll share with you how to do that in this video. So we're up 30% for the year. The Dow's up 3, the S&P's up 14, and the Nasdaq's up 30. So we're catching up to the Nasdaq again. We were beating it, but now we're behind the Nasdaq some. And that's because Cornerstone had its X date recently, so it fell pretty significantly from its recent high. But it's up today, as usual. We're up $2,600 today, no big deal. 0.39% is the number to watch, and we're beating all indexes like that. Dow's up 0.66, down 0.66. The Nasdaq's down 0.32. SP is down 0.5. So we're beating all the indexes again here. And that's, of course, due to Cornerstone. Now, I'm not going to get into Cornerstone too much today. I'm just going to tell you that because there are new users at this channel every day, new viewers. So Cornerstone, I have the market price here at $8. It drips my dividends of 21% here down at $6, $6.49, $6.79, $6.54 each month. This equates to a 24% gain here for this share, this tax lot at $6.54. 671, we have 21% gain. 649 up here, 25% gain. Okay, this is all because Cornerstone drips its dividends at the NAV, 21% dividend. It drips it at the NAV, and it gives you days gains as well. So you get capital gains from those drip shares every month, those 20% gains. You get a 21% compounded yield down at the NAV each month, and you get days gains potential, which is about $2,000 here, as you can see in our account. So we're up today in Cornerstone, and that's part of how I'm able to share this video with you, okay? Because look, our available withdrawal has gone up by 2,000 as well. So I told you in the last few videos how to scale your debt safely using the power of maintenance, using the power of index investing. And in this video, I'm sharing with you how to live out of my debt without paying it. So as you can see, I have 272,000 in margin debt. That's okay, because I'm charged a low interest. Now, in the past videos, I showed you how to live on your debt, even with a high interest, even if you have a negative interest rate. Like if you have 15% margin rate you're charged and you're only earning 10% in dividends, if you take out that debt for the year that you're paid in dividends, at the end of the year, you're going to pay off your debt and you'll be left with some interest, yes, but after that interest is paid in one more month or so, then you're left with all those dividend producing assets to yourself. I earn over 100,000 per year in dividends, so this 270,000 that you see in debt will be gone in less than 3 years, and my account will grow from 400,000 to 700,000. I'll be left with zero debt. Now, what if you don't want to pay down your margin? A lot of people are asking, once again, Todd, your margin keeps growing. Yeah, because I keep adding to things since the market is really cheap. There's still a lot of cheap things within the market since it got destroyed in 2022. So I keep adding to things where I see opportunities, especially if I can buy low maintenance names where it doesn't take up much equity. If you need help with learning what maintenance is, email me for my e-guides at akintodd48@gmail.com. I have margin e-guides and Cornerstone e-guides if you're interested in playing both of these aspects of your brokerage account. Cornerstone, you have to learn how to play it right. It has a rights offering every year, which I give you alerts on my Discord server on. So if you already bought my e-guides, you get automatic alerts to my Discord server for free. So if you're worried about when the rights offering announcement will come and you bought e-guides already, you should see that alert in the Discord server when the time comes. If you don't want to play Cornerstone, and you're not worried about how to play Cornerstone, you have to learn how to play that rights offering correctly. Because a lot of people complain, Todd, why is this fund down so much over time? You have to learn how to play the drips right, the dividend reinvestment program, and the rights offerings. So, and if you don't want my e-guides, you're not interested in buying e-guides on Cornerstone and you just want the alert service, I'll link my Patreon in the description below. Okay, now what if you don't want to pay down your debt? Well, this is what you have to understand, guys. Are you ready for the kicker of this video? The market averages a 7% gain over time, every year. The market averages a 7% gain per year. So over time, you're going to see, even if you have a down market in 2022, you're going to see the market or the S&P average 7% per year over time. That means that on a $400,000 account, like I have, $400,000 plus my $270,000 in debt, because these are all linked to the indexes, all of my investments, this is the secret, since they're linked to the indexes, I can give myself a forward pay raise of 10% because the indexes average they average 10% a year when you count inflation and dividends. Then the S&P averages around a 10%. So if you take 272 plus my 400,000, that's about 700,000, correct? 400 plus 272, 672. Let's just round it to 700,000 for math purposes. 700,000 times 10% means I get another 70 grand to play with every year because I tie my investments to the indexes. That's the secret. So if I'm up today, which I was up over 3,000 today, now we're tapering off because the market's at the highs, I think. I also bought some shorts today. Excuse me. I bought a short. I added to my shorts an SQQ today. SQQ right here, 500, but also I added to my QQQ options there. I added another contract at 37. So yeah, the market's pulling back some, I feel, but overall the market should average a 10% gain per year, and we're up way more than that this year. So I can take that out of my living. I don't have to have my dividends paid on my debt. I can just simply live out of this available withdrawal number. As this number grows, as my day's gains grow, so does your available withdrawal. So that's how I'm able to. So if I get 70,000 more this year out of the market going higher, like it does on average, then I have 70,000 more dollars to play with. Now, this is for advanced investors, okay? You don't want to just live on this strategy of hoping that the market goes up over time, and so you just pay yourself out of those capital gains. I still prefer to pay myself out of dividends, but sometimes when the market's going higher, you can afford to splurge in life. You can either buy things, out of your brokerage account. You can buy nice things, buy a trip, buy jewelry, whatever you want, even though I don't advise buying jewelry. You can buy nice things. You can invest in more assets. I invest in more assets that are low maintenance in particular, so I don't even notice the drag on my available withdrawal. Again, if you need help with maintenance and understanding how to play margin, email me for my e-guides at akintodd48@gmail.com. So again, once you get more into the advanced areas of the market of managing your portfolio, you'll see that your debt, you have two forms of income. You have your estimated income, which is over 100,000 per year in dividends for me at my channel. And then you also have 70,000 of capital gains that you can withdraw from. And you have to wait, of course, till the market goes up. You can't just withdraw before that happens, because then if you suck all of your equity out before the market goes up, then you could get into a margin call. So I don't like to spend out of this unless the market's had a huge run up, and I'll barely spend out of my equity. I don't like to splurge on nice things. Having a disciplined mindset in investing takes discipline both on the court and off the court. You can't just check your emotions in the market and have nerves of steel and try to get through the market. You also have to deal with your spending habits outside of the market, and my margin e-guide also covers that. It's a complete guide on how to live financially free using the power of a brokerage account and using margin. So anyway, I think that'll do it for the video, guys. Okay, I'll keep it brief today. We all know that Cornerstone is my vehicle of choice to get me extra dividends and growth out of my account per year. You just have to learn how to play that fund right. And then I love all these other funds, but they either have high maintenance or they're stock specific, like a Tesla, or they don't give the dividends that Cornerstone gives. So that's how I'm able to survive with this margin strategy. Cornerstone's low maintenance and high dividend. Low maintenance meaning it sucks up the least amount of equity. 30% maintenance. I've showed you that in past videos. So I can afford to have 400 grand on of Cornerstone because it's low maintenance. It sucks up barely any of my equity. A lot of people ask when you drip the shares, well, should you just pay back your margin with the drip shares of Cornerstone? Yes, but I don't do that anymore because I don't like to lose my income. And when you sell Cornerstone back, it's such low maintenance that it barely even budges your available withdrawal. If I sell 10,000 of Cornerstone back and dump it, then this available withdrawal will only grow by 3,000 because it's 30% maintenance. So yeah, I'm not going to see a huge cushion in my available if I get rid of Cornerstone. Why get rid of that? I'd rather sell from things that are higher maintenance down here, such as SPXU, my shorts, even FangD or Fangu, or even let's say TQQ, right? TQQ here and Fangu. These are both high maintenance names that don't pay a dividend. So one day I will sell these. That'll be another 10K out. So 10K will come out. I'll lower my margin by 10K, but my available will jump by about 10K because those are 75% to 100% maintenance names. So that's how you really get a cushion in your available withdrawal. You sell the high maintenance names, not the low maintenance names like Cornerstone. So I live off A, dividends, and B, capital gains, which in the market you average 7 to 10% gains per year. You have to add that back into your account value since you tie everything to the indexes. I can't promise this if you don't tie yourself to the indexes. And that's how I get an additional 70,000 per year of cash flow to live within, and I don't have to pay down my debt. I can just let this available withdrawal grow as this number grows. So I hope you found this video beneficial. This is more for the advanced investor who's more comfortable with margin, but nonetheless, that's how I do it. If you need more help with margin, email me for my e-guides at aikentodd48@gmail.com, and I'll talk to you soon. Thanks.